Hello everyone, welcome to Crypto Weeklies. My name is Josh, and today we'll be discussing about Ethereum using four different indicators: the simple moving averages at 100 week, 200 week, 300 week, and the price action returns using the performance after a bear market. So let's just get started. As you can see from the right hand corner of your screen, the price of Ethereum is coming in at almost $1,700. To be precise, it's $1,690. Whereas you can see on the three lines, the 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 topmost line, which is the 100-week simple moving average for Ethereum, is at $2,400, $2,412. The line, the 200-week average for Ethereum is $1,400, and the 300-week is at $1,065. So what do these three numbers mean and how they could help investors navigate how to perform their investing decision? The first line is in red, the 100-day or 100-week moving average. So once this line kind of the price of action of Ethereum moves below this line, this the color of line changes from red to white. Similarly, for the 200-week moving average, the color of line when the price action is below the line, it turns from yellow to blue, and for third one, which is 300-week moving average, we haven't quite feeling for went down this uh, line yet. So the color is in orange. So you can see this is tracking all history of Ethereum's price action on a weekly scale using Fibonacci candles. And these lines might help uh, an investor decide whether it's a good time to accumulate Ethereum. So, for example, in August of 2018, the price for the first time went below the 100-week moving average. Uh, an investor who was keen on Ethereum and looking for a good entry opportunity could have used this indicator. So this is just historical data. So and thought, okay, the price action is below 100 week now. So, and if they had accumulated from at that time, they would have been able to buy Ethereum at $330, which is almost still, even in this bear market, it would have made a 6x or a 6 times return on their investment. Similarly, as Ethereum matured and we had more price data, another indicator that market participants could have used is the 200-week moving average. So in July of 2019, for the first time, Ethereum's price action went below this level, and at that point, the price corresponded at $220. Considering Ethereum did almost went up to 4,800 after just barely 2 years uh, from from that point. Using this line as an indicator, the investor in hindsight could have made 24 times return or 24x on their investment. So coming today in this current market cycle, we see that the 100-week moving average has been has turned from red to white in May of 2022, which at price corresponding at $2,157. But you can see that this price action, even though this price action was going down, the 100-week was kind of going up. Now slowly it has turned its orientation from going up to going slightly down. So as the market cycles progress, there is a case to be made for whether 100-week simple moving averages is enough to decide whether Ethereum is in a good accumulation zone. Because we saw that in the last cycle, 200-week was actually a better entry point for market participants to uh, accumulate Ethereum. So maybe as cycles progress, 200 week would be replaced by 300 weeks of price action, where if the price action falls below this line, that could be a good entry point. So yeah, these indicators help in determining accumulation strategy of for Ethereum as well. So before we continue, I just wanted to make sure that none of the content shared in this channel is financial advice of any sort, because this is just me sharing my perspective on the market based on whatever knowledge I have on the cryptocurrency market. Uh, and as you might know that these markets may not follow the exact path deterministically, so there might be a few variations each time due to several factors such as macroeconomic conditions or uh, other factors such as regulation or any other factors pertaining purely to Ethereum's own uh, trajectory as an asset. So, but nonetheless, in this current market, in this current bear market, uh, Ethereum uh, visited this 200-week um, moving average twice. First in June, where the price capitulated almost at week down almost to $850, and the price stayed below the 200 week for almost 1, 2, 3, 4 weeks almost. Similarly, again it visit the price action visited, then it rallied beyond this. Uh, from here, it rallied beyond the 200 week data, and then the price again visited this 200 week level in November of 2022, where it stayed there from November 14 to January of 2023, so almost 6 weeks. So this again could coincide in future as a good area to accumulate Ethereum. Again, not financial advice, but something to do your own research on. Another thing that you can see on this chart is the boxes which are in red. These boxes correspond to what happens to Ethereum after it reaches its market cycle peak. And for this exercise, I've considered the peak in early May, because these two peaks were kind of similar length, of the similar height. So that's why if you can see that once Ethereum visits its peak in the bull market, it kind of stays stays in this range before either moving up or moving down. So the once in the first market cycle for Ethereum, once it stayed sideways for 14 months from February to April almost of 2016 to 2017, uh, the, the asset, the Ethereum price action moved to the upside. Whereas in the second market cycle, something interesting happened after the peak was reached mm, in January of 2018. Ethereum didn't spend uh, more than 6 months, and it capitulated below this band. Whereas again in the third cycle, you can see that we did manage to spend almost 14 months from April of 2021. We stretch it back because this area started actually, the price action entered this band actually March and didn't leave until May of 2022. So almost 14 months again. But now we have uh, the price of the Ethereum has broken down to the downside, and it is hitting some of the key uh, levels as moving below 100 week, 200 week, and 300 week, which was the case in the second market where it first moved below the 100 week, then again tried to rally up till 100 week of activity, then again capitulated down, went below the 200 week, and then again rallied to the upside. So let's assume that we are seeing something which is like a stretched out version of this uh, combination of this market cycle and this market cycle. So that would mean that uh, Ethereum have could spend a considerable amount of time before it visits this box in red. Also, another thing to notice is these price action uh, bands in green, which provide information about Ethereum's return for each market cycle. For the first market cycle, Ethereum had about 51x or 52x return. Second, it had almost 65x return from when it uh, moved up- moved away from this zone in red. So, but now in the second cycle, uh, in the recent cycle, Ethereum only made about a 3x from this all-time high, uh, shown in the which is highlighted in the white band. So this helps us determine that it may be in future due to the diminishing returns uh, that happen for any asset with an increasing market cap. We might see from this point only maybe less than a 3x. So that would land us from 4,800 to about, let's say, around $10,000. So that is one of the like a projected assumption for Ethereum's price in the upcoming bull market. This is just speculation, of course, because there are several other factors at hand, but this provides us a guiding principle uh, to do your own research on. So just wanted to show you all the information at hand, and thank you for listening to my video today, and hope you have a very wonderful weekend. I'll keep on making more such videos, so please stay tuned by searching the name of the channel Crypto Weeklies in the YouTube search bar or subscribing to our channel. Again, thank you.